Did you know the IRS just busted a $10.6 billion financial crime scheme? Not a typo, not a projection, not a theoretical estimate. $10.6 billion. Uncovered, traced, seized, and dismantled by a division of the US government most people barely know exists. And here's the part that should make you stop and listen. This isn't just about numbers on spreadsheets. It's about real people, real crimes, and financial deception so sophisticated that for years it operated right alongside the legitimate economy, quietly draining resources, corrupting institutions, and funding crimes that ripple outward into everyday life. If you think this doesn't affect you, think again. Because the money involved didn't vanish into thin air. It moved through banks you recognize, industries you rely on, and systems you assume are safe. And today, we're pulling the curtain back. Stop what you're doing for a moment. The IRS Criminal Investigation Unit, often mistaken for a back-office tax department, has just revealed $10.6 billion in criminal financial busts tied to ransomware gangs, offshore tax evasion, healthcare fraud, crypto laundering, shell corporations, and international criminal networks. This isn't just news, it's a warning, because these crimes weren't sloppy. They were elegant, professional, engineered by people who understood the financial system better than many professionals who work inside it. And if you want to understand the modern world, how crime actually operates now, you need to understand what the IRS just exposed. The billion-dollar takedown. What is IRS criminal investigation? Let's start with the number, $10.6 billion. That's not a single case, it's the combined result of hundreds of investigations, some stretching across continents, others unfolding quietly inside suburban office parks and medical billing companies. At first glance, it sounds like tax stuff. It's not. What IRS CI really is. When most people hear IRS, they imagine audits, forms, and letters that arrive in plain envelopes. IRS Criminal Investigation, known internally as IRS CI, is something else entirely. These are federal law enforcement officers. They carry badges. They carry firearms. They execute search warrants at dawn. Think of them as a hybrid between the FBI and a forensic accounting firm, trained to follow money the way detectives follow fingerprints. Their mandate goes far beyond taxes. IRS CI targets large-scale money laundering, terrorism financing, drug trafficking networks, human trafficking rings, cybercrime and ransomware operations, massive healthcare and procurement fraud. Wherever illicit money flows, IRS CI follows. And unlike many agencies, they don't start with suspects. They start with the money itself. Financial crime today doesn't look like suitcases of cash. It looks like code. Cutting-edge technology. IRS CI agents use proprietary software, advanced analytics, and artificial intelligence to analyze billions of financial data points. They track cryptocurrency transactions, blockchain anomalies, wallet clustering patterns, exchange laundering behaviors. What looks anonymous to the average observer appears to them like a map. Picture it this way. Every transaction leaves a shadow. IRS CI specializes in stitching those shadows together until a complete financial footprint emerges. A criminal might believe they're invisible, but over time, patterns form, habits repeat, and anonymity collapses. Undercover operations. Technology isn't enough. Some of the most significant cases still rely on human infiltration. IRS CI agents pose as money launderers, crypto brokers, offshore facilitators, dark web intermediaries. In one recent case, an agent spent months inside encrypted chats, negotiating transaction fees with criminals who believed they were dealing with a fellow professional. One wrong word, one hesitation, one slip in jargon, and the operation would have collapsed. These cases don't end with dramatic shootouts. They end with handcuffs placed on people who never imagined the government was already inside their operation. The most underrated weapon in IRS CI's arsenal is forensic accounting. This is the art of finding connections where none appear to exist. A consulting firm in Delaware, a medical supplier in Arizona, a crypto wallet in Estonia. Individually, they mean nothing. Together, they reveal control, intent, and fraud. It's like solving a jigsaw puzzle where half the pieces are digital, a quarter are intentionally mislabeled, and the rest are scattered across 5 countries. Case file: The Crypto Kingpin's Downfall. Now, let's talk about one of the most astonishing cases behind that $10.6 billion figure: the scheme. IRS CI internally referred to it as Operation Arctic Frost. At its core was a cryptocurrency mixer, a service designed to scramble transaction histories to obscure where funds originated. In theory, mixers are about privacy. In reality, this one became a central laundering hub for ransomware gangs, dark web drug markets, stolen corporate data rings. Billions flowed through it. Victims ranged from small businesses locked out of their systems to hospitals forced to divert patients during cyber attacks. The breakthrough. For months, investigators hit a wall. The wallets were rotating, the servers were distributed, the operator never reused credentials, until one thing didn't line up. A tiny transaction, almost meaningless in value, was routed through a wallet that briefly touched a regulated exchange. Milliseconds, that was all it took. From there, IRS CI reconstructed years of activity, linking infrastructure, timing patterns, and financial flows. The kingpin wasn't some faceless hacker. He was a meticulous operator living openly, investing in luxury real estate, digital art, and high-end vehicles, all funded by laundering other people's misery. The outcome? The arrest was quiet. No resistance, no spectacle. But the consequences were enormous. A multi-decade prison sentence, hundreds of millions in seized assets, luxury cars, rare NFTs, crypto wallets drained and forfeited. And overnight, ransomware operators across the globe lost one of their primary financial arteries. The message was unmistakable. Anonymity is temporary. Accountability is not. Unbelievable schemes, global tax evasion, and beyond. Crypto grabs headlines, but much of the $10.6 billion came from crimes hiding in plain sight. Offshore secrets exposed. In one investigation, IRS CI dismantled a web of shell companies spanning the Caribbean, Southeast Asia, Eastern Europe. Each entity owned another. Each trust obscured the next. The purpose? To hide billions in untaxed income behind layers of legality. Fake directors, nominee shareholders, trust agreements written to confuse even seasoned professionals. But money doesn't lie. When investigators overlaid transaction timing, currency conversion patterns, and asset purchases, the structure collapsed. What looked like global diversification was actually centralized control. The ghost corporation scam. Another major category involved ghost corporations, companies that exist only on paper. No employees, no products, no customers. yet millions flowed through their accounts. These entities were used to clean money from drug trafficking, government contract fraud, bribery schemes. Invoices were fabricated, services were fictional, audits were bypassed using volume and complexity. IRS CI traced these funds backward through false vendors, layered payments, and eventually to the individuals pulling the strings. Healthcare fraud's financial backbone. Perhaps the most unsettling cases involved healthcare. Billing for surgeries that never happened, prescriptions written for patients who never existed, clinics designed solely to process fraudulent claims. But the fraud didn't end there. The stolen funds were laundered through real estate, import-export businesses, medical equipment suppliers. What looked like thriving enterprises were actually financial washing machines. And the cost wasn't abstract. It showed up as higher insurance premiums, strained public programs, and fewer resources for legitimate care. The unseen battle. Why this matters to you. It's easy to think of financial crime as distant. It's not. The human cost. Every dollar stolen through fraud raises costs for honest taxpayers, reduces funding for infrastructure and services, strengthens criminal enterprises that cause real harm. These aren't victimless crimes. They affect retirement funds, healthcare access, public trust, and they reward those willing to manipulate systems the rest of us rely on. Why IRS CI matters more than ever. Financial crime is evolving faster than ever. Criminals move at digital speed, across borders, through technologies designed for efficiency, not accountability. IRS CI is one of the few agencies built specifically to operate in that environment. They adapt, they retrain, they innovate. And that $10.6 billion figure isn't an ending, it's a snapshot. A look ahead. The next threats are already forming. AI-generated financial scams, synthetic identities, automated laundering networks, encryption challenges posed by future computing advances. IRS CI is already preparing, training agents who understand both finance and code, law and data science, because the next wave of crime won't look criminal. It will look normal. The story of the $10.6 billion bust isn't about punishment. It's about exposure. It's about reminding the world that no matter how complex, how global, or how hidden a financial crime becomes, someone is still watching the money. And sooner or later, the trail always leads somewhere.